Good evening, everyone. Welcome to Crypto Pulse Weekly. For those joining on Instagram, this is Crypto Pulse Weekly, a weekly broadcast of happenings in the cryptocurrency space and an analysis of the markets. So, as usual, let's get started. It promises to be a very short one today, as not much has changed in terms of market dynamics since the last week. There are some underlying differences, but on the surface, it looks like everything looks like it was last week. Maybe a bit better, but it looks a bit different. So as usual, we'll go through the market updates, the crypto vital side. We'll talk about the crypto drip, and then take any question and answers that we'll have. So hopefully we'll be able to finish a lot faster than last week today. So the first thing I want to talk about was the issue of regulation. So I usually cover volatility, regulation, and sentiment before breaking down, the actual news events that we have. So one of those that I find interesting is the position of the Central Bank of Nigeria on crypto. I saw in the news today that they're making a U-turn on it. Well, as I've said earlier, we missed the bus originally because what could have happened then was to have called for like a town hall meeting of all stakeholders. One, that would have helped them to know who the people involved in crypto was. Two, they would have obtained significant information on how the thing works, and it would have helped them to structure regulation in terms of how to benefit from that ecosystem. But what essentially has happened is billions of dollars now have gone into a parallel economy in the crypto sphere, and the government is completely bereft of how to tap into that, which is a shame. So the U-turn now is a bit too late, in my opinion. They will be able to make something of it maybe in the future, but for this current bull run, I think they completely missed the bus. Two other things that came up this week in terms of regulation. One was additional noise from the UK. I'm sure people who are familiar with the news in the UK have been hearing all sorts of from the Financial Conduct Authority. Just for context, the Financial Conduct Authority has not issued any new statements from the one they made late last year and the beginning of this year, which was cryptocurrency exchanges in the United Kingdom are not allowed to sell derivatives to their customer. That is the core of the message. And that is the same message that is being told to Binance Market, which is the legal entity representing Binance in the UK. However, because there's a lot of bad blood from within the banking system with Binance, all sorts of news have been muddled up and there's been a lot of confusion. So because of that, you have people like the UK's advertising agency saying that they're going to be clamping down on cryptocurrency adverts so that they can protect people's money. This is an agency that really, truly does not take any action unless there's a direct customer complaint. But what they're saying now is they want to be proactive. They're not proactive. So the reason I'm bringing this up is I want you guys to think about this deeply and understand what is going on. So UK's advertising standards agency is not concerned, let me use that word, is not concerned that gambling is being advertised on the TV for shows that are rated for children. I don't know if you're aware of that, but if you watch TV in the UK, you'll understand that Ladbrokes and all the gambling outfits, they advertise freely on all sorts of media. But these guys are concerned and want to be proactive with advertisement of crypto to protect customers. They're not protecting customers from gambling, but they're interested in protecting customers from cryptocurrencies advertisement. And as a matter of fact, they're not doing it on the basis of any report. Nobody has gone to them to say that, we lost money in crypto. So I wanted to, piece all these pieces of information together to at least give you a frame of mind what's happening in the in the mind of the ruling elites. Let me use that word. In the same vein, even I didn't think it was worth my time to carry the news. You would have observed if in the UK that almost all major banks, HSBC, Barclays, have come out to say they're not going to allow their customers. So for customers who have sent deposited funds to Binance before, they wrote them. Some of them, they wrote them by mail. Some of them, they wrote them by text to say that, you know, we know that you sent money to Binance before, so to protect you from a loss of your investment or something like that, that they're going to stop them from sending money to Binance. And that for clarification, they should go online, basically, to go and check what's going on with FCA and Binance. I think it's in very poor taste, because they're not even professional about it. That's what's annoying me. So if you have an official statement that you want to make, you should come out with your chest, as they say in Nigeria, as the bank, and make that statement, as opposed to, hobnobbing customers and sending them text messages or messages that, we're not going to allow you to deposit to Binance. What it tells me, and I made that joke on Twitter on Tuesday, that what this tells me is that Binance is sucking the blood out of the deposits that these banks will have enjoyed hitherto. And of course, they're not finding it funny. But what is going to happen? So this is what is going to happen. Right now, most people in the UK don't understand that you have things like Binance P2P that you can use for UK, the same way it works in Nigeria. And you have things like local Bitcoins that you can use in the UK as well. What will start happening is, all of a sudden, when people start making their gains in crypto, you find out that all these alternate channels, like they say in medicine, they'll be like anastomosis. They'll open up channels that hitherto have been carrying low volumes of capital, will open up big. So all the payments app, all the the PayPal, the Skrill, the Cash App of this world will suddenly blow out and eclipse the banks completely. Unfortunately, I don't know why. Maybe it's directly from above, but I don't know why they're doing that, because it's completely dumb. I mean, I don't want to go into the details of what the thought process were, to think that trying to block people from, so you put your own money, the money that you work for, you put it in a bank, and the bank is saying you can't send money to this person because we want to protect you. I don't know how that sounds, but I think it's it's not only an encroachment of fundamental human rights. I think it's an overreach from those banks, and I think they're going to pay very dearly for it. It's just a matter of time. In that same vein, in the regulation space, I see that there is this discussion in IMF as well at G20. So G20, there's discussion between IMF, Bank of International Settlement, and the World Bank around central bank digital currencies. This came up last year, 2019. This actually came up when the Bank of International Settlement said they were going to start allowing people to settle in gold as opposed to exclusively for the US dollar. Then the Chinese went and said they also want to settle in yuan. I'm not sure if that fell through. I can't remember that story. I think it fell through early last year, that you could settle international bills between countries. If you are dealing with China, they could settle in yuan. And I know that the Central Bank of Japan and the European Central Bank, and I think the Bank of Canada, are piloting these CBDCs. So on the one hand, they're trying to dissuade the public from getting involved or being early adopters in these revolutionary technologies. On the other hand, they're trying to come up with a counter. Let me use that word. So what's going to happen is 2022 or 2023, these guys are going to come up and say, you know what, you don't need to get involved with those cryptos. You can buy our digital, you can, just convert your normal pounds to digital pounds or your normal dollars to digital dollars. And you have crypto and you're fine. But the difference between those ones and many of the cryptos on ground is it's still the same money printing. It's just made the money printing easier because now you've taken out the cost of paper, you've taken out the cost of ink, you've taken out the cost of design, you're taking us because of logistics and scaling to print money. It's going to make money printing a lot easier, probably to the scale of 1 to 1,000 by central banks. What that means is if the US government needed to print 5 trillion now in 1 minute, they can do it with a click of a button. I don't want to begin to think about the ramification of the central bank digital currencies, but we're going to get there. And I think we're going to get there a lot faster than we anticipated because of these central banks and these world banking bodies trying to catch up with technology. Again, they're already 5 years behind because now that they're still talking about CBDC and still trying to catch up with Bitcoin, people have moved into DeFi, people have moved into NFT. So they're really falling behind. Then there was this warning from, okay, I'll come to that. There's the warning from, I don't know whether it's UN. I mean, it's ridiculous. I'll come to that later. The sentiment is mixed right now because a lot of what I'll call short-term whales, as I'll call them, these are people who have huge amounts of money that trade in, usually institutions, that trade on crypto exchanges like Bitfinex, and they short the market, meaning they just put a lot of shorts on the market. So when you're shorting the market, basically what you're doing is you are buying, you are borrowing from the exchange. How do I explain this? You're borrowing from the exchange to sell the price of a particular asset, especially when it comes to crypto, at a specific price. What that does is once you enter that position, it depresses the price. But if the market does not go in your favor and you need to sell that position, immediately you start selling, it starts pushing up the price because you're taking a contrary position to the market. So last week or week before, I said, some guys were trying to do a $1 billion short. I don't think that short was success. It wasn't successful. I think they found a way to ease themselves out of that position because they tried to short at around 36, probably hoping to get to 30, but the market really never got to 30 that particular time. And they tried again, it still didn't get to 30. And the same thing has played out again today. The market has been hung on 32 as well. So it's mixed for now. The only thing hanging in the balance in terms of major events that can affect the price is the Grayscale lockup unlock period. So if you're familiar with Grayscale Trust, Grayscale Trust is like a packaged product that converts the shares of Grayscale Trust into Bitcoin, essentially. So what happens is if you buy one Grayscale Trust, depending on what type you buy, if you're selling at a premium, you might buy it as much as 20% above the price of Bitcoin at that particular time. And then you have a lockup period. That lockup period is usually between 6 and 12 months. Most of them sit on 6 months. So there's a lockup period I think is going to happen for some set of investors this month. So in those cases, most investors either decide to sell into the market or just roll it over. I don't think most people are going to sell into the market, but they've been making noise about it. JP Morgan has been making a lot of noise about it. When I hear JP Morgan making a lot of noise about something, I know that they have vested interest. They're the ones that said, Bitcoin is going to go to 20K because, of course, they have their others sitting at 25K trying to buy cheaper. It's anybody's guess. If the market does dip below 30K, it's going to be a very violent up move anytime it happens. But I don't think it's going to happen anytime soon because there seems to be lots of institutional buying and institutional orders still sitting around 30K, slightly below and at 30K. So let's go into other news. The first major news that I think is of importance today is the news that Square, which is owned by Jack Dorsey, is a payment company, the payment company that owns Cash App, which is Square. They're planning to launch a Bitcoin hardware wallet. What does that mean? So a Bitcoin hardware wallet allows you to store your Bitcoin, how do I put it now, on a particular app. So what they're likely to do is to expand the Cash App app and give it a functionality to store Bitcoin. So what it's done when you're storing Bitcoin on a decentralized app, what really is happening is that it's not like the money is moving away from the blockchain. What is happening is the money is sitting on the blockchain. So if you signed up for the app, that application would generate or would create a hardware wallet, which means it will create an address on the blockchain for you and then give you a view of that address. That's what happens for most cryptocurrency wallets. So what you are seeing, even if it's Trezor, what you're seeing essentially is a view of your wallet through that app. How do the wallet makers make money? They make money off your transaction charges. So when you want to move money, they're going to take a very small fraction. It's usually not noticeable because it's usually a fraction of what your normal transaction cost will have been on the blockchain. They'll take a fraction of it, then they'll issue out the transaction on your behalf. That's how most wallet app and hardware wallets operate. So Square is planning to go into Bitcoin hardware wallets. Why is this significant? I'll tell you. So on the one hand, we talked about PayPal when it went in and how that has driven significant adoption of Bitcoin. Square has 36 million as at last year. I'm not even talking about this year. As at last year, December, Square had about 36 million users. If it launches a hardware wallet, which is going to be immediately available to its user, what it means is that the number of new users on the network is going to grow significantly, and so will the demand, because what it then means is with your Cash App, you can just buy the crypto and hold it. This is very significant. It's as good as, when PayPal got into allowing cryptos in September last year. This, I think, is going to be a very huge step. The day it happens, I don't know when they're going to launch it. I'm sure they're already building it. The day they launch it, you're going to see a very huge spike in the price of Bitcoin. Remember, we're still less than 200 million people that are using cryptos generally all over the world. And if these 36 million people get on this ramp, what it means is that the number of the network will increase by that same volume. So I think this is a major news. Of course, because the market has been down for a while, it's not reflected in the prices. But this is huge news for the markets. I'm going to give you a tip at the end of today during the crypto tip about something that is happening already in the market, and it's likely to continue for the next 3 months before people get to shock up. So moving on, I just wanted to show a number of metrics, on-chain metrics. From time to time, I talk about on-chain metrics, and I, mentioned that on-chain metrics have consistently been showing that we're still very much in the bull market, and that regardless of what's happening in the exchanges, these metrics have been consistent. So one of them is the exchange flows. Just before the price crashed in June, the May and June crash. In fact, I think we started from May significantly. There was significant flow of Bitcoins to the exchanges. But what was then happening on-chain at that point was the money was moving from what I'll call younger whales in terms of the age of those wallets. Those wallets were less than 150 days old. They were moving from younger whales to the bigger whales, and they were moving from newer investors to the bigger whales, the long-term hodlers who are like, their wallets are more than a year old. What that meant was that people were selling off at a loss. At some point, I think that was about 4 weeks ago, people sold off at a loss and they sold to the hands of these long-term holders. So that's been happening persistently now. At some point, the exchange flows, which means the net flow of Bitcoin to exchanges coming in and out, started getting negative. I think after about 3 weeks, started getting negative. And now it's down to the lowest it's ever been at 17,000 Bitcoins. That's significant. On the other hand, you have a growing pool of stablecoin. There's a news I didn't carry here, but came up during the week. There's a company called Circle. They're going public. They're selling stablecoins. They want to go public and they want to raise 450 billion or something like that. And somebody was asking me on Twitter. No, I was asking somebody on Twitter that I follow that what's the meaning of this? Why is this news bullish? And I said, it's very straightforward. Stable coins provide on-ramp and off-ramp into crypto. What do I mean? If you want to get into crypto, you can buy stable coin to hold the value of your crypto and get in at an opportune time, like now when the prices are down. And then when the prices start going up, you can bank your profit with stable coins, meaning you can sell off with stable coins because stable coins will not diminish in value or fluctuate like Bitcoin or any of the other cryptos. But what then happens is before 2019, in the past bull run cycles, what happens is people usually would sell off. They'll sell off their assets at the end of the bull run, then sell into stable coins, then sell into fiat. But what's happening right now is people are not selling into fiat. So people are selling into stable coins. So even the people that took profits, market makers that took profit off the market before the crash or as the crash was beginning, they've sold into stablecoin. So stablecoin pool is now growing and growing and growing exponentially. What this means is that money is going to start finding its way into interesting opportunities within the crypto space. Another on-chain metrics that is of importance is new users coming onto the new blockchain network for Bitcoin. It's also at an all-time high. So you have new addresses being opened on the blockchain at an all-time high. Then the number of on-chain transfers, meaning transfer between addresses on Bitcoin network, is almost next to zero right now. What does that mean? In interpretation, what it means is everybody is holding their ground. Nobody's selling their cryptos. That's what it means, to be honest. In plain terms, the people that are accumulating are not selling. The new guys that are coming into are holding their position. It's going to get to a threshold where the amount of Bitcoin flowing into the exchanges becomes too small for the market. And at that point in time, all market makers will be forced to respond with the price increase. What will then happen is when they respond with the price increase, because there is so much large pool of stable coins sitting on the sidelines, those will start getting in rapidly. And of course, that's going to drive the price in a very furious manner. So keep your eyes peeled. I think you're going to see some things happen in this space. As I said, I'll tell you something at the end of if I don't remember, please remind me. I'm going to say something at the end of today's call about a phenomenon that's going on in the background and that's likely to blow out in the next few weeks to few months. So these are the on-chain metrics. So regardless of what the price is saying, this cannot lie because this is actually what is happening on the blockchain. And as I said, for more than 6 weeks now, the on-chain metrics have always said that the market is not anywhere close to the end. It's not anywhere close to the top. As a matter of fact, it's almost like the nature of the bull run is changing, as opposed to before that, all the addresses get emptied of Bitcoins. Now the Bitcoins have just moved from quote unquote weak hands to stronger hands with deeper pockets. Moving on, if you were here last week and the week before and the one before, about 3 weeks ago as well, you have noticed we talked about China and the miners that were forced to leave China. So now China's hash rate has dropped by 90% because most of the miners have left either to Kazakhstan, to Russia, or wherever. But what's now happening is there is now an uptick of mining within the US space. There's a news I left out. I talked about some new mining farms springing up in Texas. So there's a race. There's a race in the US that people are probably not aware of within mining companies or within states, let me use that word, to acquire the most capital in terms of this Bitcoin and crypto ecosystem. One is Florida positioning itself as the new Silicon Valley for Bitcoin and crypto ecosystem. Two is Wyoming giving all sorts of licenses to all sorts of crypto companies. So they were the first to give banking charter to Kraken last year. They've given to so many other companies as well to offer banking services with crypto services. Then three is Texas. Texas is really more or less interested in mining farms. So there's been a lot of infrastructural projects going on in Texas, building mining farms. So as I said, when this China stuff came up, now it might actually be a good thing that China, said they wanted to ban Bitcoin, because what it now does is the balance of power in terms of hash rates is going to shift to the West. I mean, significantly the US, because that's where the most money and the most capacity is. So this company is a US-based mining company, Bitcoin mining company. That they're okay, but they're not as big. But right now, they're shelling out $48 million to acquire 7,200 mining rigs. That's a lot of mining rigs, by the way. I don't want to go into the technicalities of that. But what that does for them is by the time they're at full installed capacity, they will be like the top 12 to top 15 in Bitcoin miners in the world. And if you remember something I said I think it was in the month of April, that Bitcoin miners used to be obscure companies that nobody knew before now. And that in the coming months and the coming years, these Bitcoin miners are going to come out because they'll suddenly realize that we don't need to spend our Bitcoin. We can go to the market and raise money or sell shares of our company and keep our Bitcoin. When that happens, which is very close with what we're seeing now, there will be no Bitcoin anymore to sell, because there will be no miners to be selling their Bitcoins, because they can actually just go to the stock market and raise money, or go to capital market and raise money against their Bitcoin as collateral. At that point in time, definitely we'll be talking about 7 figures Bitcoin. So this is one of the developments that's playing in the background in terms of mining. So I expect that over the next 10 months, most of the mining power is going to shift to the US, because it's almost like, let me not say they've been waiting for this opportunity, but this is actually a good opportunity. And this company, for instance, says that their power source is 100% renewable. And because in many states in the US, nuclear power is not banned, and nuclear power is the cheapest, as long as there is water, there is no fallout. What I mean is the technology of nuclear power generation, it's only in a place like Nigeria that they are at risk, because somebody will forget to do their work and they won't supply the reactor with water. But as long as the reactor is well supplied and the water system doesn't fail, nuclear power is the cheapest. Just keeps running, and the radioactive substance keeps on decaying and producing electricity for cheap. So, and it has no emission in that regard. It's not environmentally safe if it breaks down. So as long as it doesn't break down, everything is fine. So for these guys, I think we're going to see more of them coming out to acquire more hash power in the months to come. Another news around regulation was Singapore and Switzerland. Many people will know Singapore as being the forefront of new money. Let me use that word, or new generation wealth management countries. Of course, we know Switzerland used to be the world's wealth haven before, but Singapore has done significantly well in recent times. There is at least that I know, there's a private gold vault in Singapore that is about 100 meters underground, where the big boys and the richest people keep their gold. I was in a conference with somebody who was telling me that stuff, that if you walk into that place, you feel a different kind of energy, that because gold sort of emits some electromagnetic field when it's in a closed space and you have a lot of it, that you will feel like you shouldn't leave the place, that you almost feel younger with the kind of energy you get from the gold. It was just, talking about his experience in that particular place. I think he went to keep money there or something. The guy is British. So these guys have been secretly trying to woo all the biggest monies in the world. And of course, now that, there's this race for crypto adoption, they've also started, the biggest banks have bought exchanges. They've done all sorts of things. Now they're racing for regulation with Switzerland, because Switzerland also wants to corner some of the money. Old money is still sitting in Switzerland, but they're beginning to see that new money might be moving to other places. So they're trying to rush regulations through in both countries, as if they're competing with themselves. Meanwhile, some people are thinking of blocking it. Anyways, I just want to mention that I think it'll be interesting to see how it pans out, knowing fully well that once this goes more mainstream, regardless of where regulation sits. So if you have people like El Salvador allowing people to, live with their Bitcoin, people just start moving to places like that. Another interesting story was the one from Steve Wozniak. If you don't know who Steve Wozniak was, or is not, I'm sorry. Steve Wozniak is Steve Jobs' co-founder. They founded Apple together. Computer geek to the core. Is not the, Steve Jobs was the charismatic and outspoken and ebullient man. He was more like the geek. He wasn't really bothered about the spotlight. So the guy said that it's a mathematical miracle that Bitcoin was founded, and I think it's better, a lot better than gold. I can't remember that interview that they had with him, and was saying that, yeah, he thinks the best thing that could have happened to the world of computing and finance, regardless of what people like. So I don't know I don't like to carry such news like Christine, was not Christine Lagarde, was a US senator, a female senator, that was saying that Bitcoin that is not sustainable, blah, 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 blah. Some funny story. Yeah, I think this is what we need to remember it. So there's a US commission. I don't know who they are. They've come up with this report saying that El Salvador should be careful about Bitcoin adoption, that because there is no, what did they say? Is that thing that WHO and the like say when they don't want to agree with something, they will say there's no research or there's no study that shows the efficacy of something. I was sorry for the diversion, but I was having a discussion with somebody before this call started. I was talking about a drug called ivermectin that is being used for river blindness. It's an antiparasitic drug, basically. Use it a lot in places like Nigeria for deworming and all that. That drug is so cheap, but that drug is very effective against COVID. Very, very effective. As a matter of fact, there is nobody I know personally that has used it and had COVID that did very rapidly recover. Now, this drug was produced, well, this drug has been around for over 30 years. Everybody knows it. It's very cheap. And there was an Australian research in April 2020 that did say that this drug actually wipes out COVID. That research was killed. Every attempt to bring it up was completely silenced. And then what you are hearing from the press and the pharmaceuticals was, there is no study to show that this thing works. Meanwhile, people are getting healed from disease. And then there was the peddling of vaccination and all that. So in the same way, you have a UN commission now giving warning to El Salvador to say there is no study that shows that their country will be successful if they adopt Bitcoin. These things are so. I mean, I wonder what will be going through the president's mind. If I was the president, I would actually double down and say, you know what, we're not starting in September anymore. We'll start in August. So basically, I'm telling him that you're on your own. Meanwhile, the guy is already on his own. Frankly speaking, the currency, they don't have a currency of their own. They depend on the US dollar. The economy is already not doing well. So why would they sit hopelessly when they have one option out that gives them a way out? So you have this UN talking head sitting down somewhere, telling them that we don't think your economy is going to work because you want to adopt Bitcoin. Same thing IMF and World Bank is telling them. But like I said, I'm a very huge fan of the El Salvador project, and I mean it's guaranteed. It's just basic arithmetics. It's guaranteed that they're going to, in 5 years' time, they're going to be a model economy. Now they might I doubt that they will want to spend the money anyhow because it's a unique opportunity. I think people will start talking about them like people talk about Rwanda today, because what they will suddenly realize is they will have a lot of capital to actually develop. They will be able to store well. What people don't realize is the current monetary system with central banking does not give you the capacity to store wealth. That is the crux of the argument. That is the basis. That's the fundamental philosophy of cryptocurrencies like Bitcoin. Because whatever wealth you want to store in terms of your labor, whatever medium you want to store it in, a money printer from the United States in form of the Federal Reserve can just print more and dilute the value of your wealth. And that's why developing countries are always developing, because their wealth is diluted by the value of the superior currencies. So a farmer in Nigeria cannot sell his goods and keep the money in Naira, because the movement of the financial or fiscal policies within the global space is crushing the Naira, local currency. So if such a farmer decides to adopt Bitcoin, what it means is the wealth it generates from his profits on the farm this year will not depreciate next year, and the ones he adds to it next year will not depreciate. As a matter of fact, it's going to grow in value because everything else is depreciating. You know, I wish I could tell this to everybody I know that's in government in Nigeria, because it is the singular solution to get out of the cycle of the vicious cycle of debt. Debt meaning DEBT, because we keep borrowing money, and because the monetary system is an infinite pool of money. The circulating supply and the maximum supply are to infinity, so they can keep printing and printing. So the people printing and borrowing money are printing more. So when you have to pay back, you are paying back with lesser value. I don't want to go into that because it really makes me mad. But let's go on. So I'm very interested. I'm really closely following this El Salvador case study, because I think it's going to shock the world. And when it shocks the world, all of a sudden, all the developing countries don't realize that we don't have to be under the stronghold of United Nations anymore. Moving on. In terms of spotlight for coins today, I'm talking about AXS. AXS is Axie Infinity. It's not been long since Axie Infinity launched, but I think it's one to watch out for if you have an eye for new cryptos. So to explain what it does, it's an NFT token, and it gives you ability to vote on developments in the gaming ecosystem. So it's an NFT token that is used for gaming predominantly. Or over and above that, because it allows you to influence decisions, you can also use it to do other things within the game. So like I usually say, if you're not a millennial, it might not make too much sense to you. But if you're a millennial, virtual reality and the gaming world is part of your growing up, and it's part of your reality. And that's why you have a particular piece of land in Decentraland selling for $98 million, because virtual reality is as real for them as it is as is brick and mortar for us. So this Axie Infinity is a gaming token that allows you to make decisions within the game depending on how much you have. You can also stake it. If you have many of it, you can stake it to get more, and then you can use it to buy another token that you can use within the game if you're playing the game. The game is called Axie, if I remember very well. Right now it's it's about $14 now. It recently came down to, what was that? Yeah, that was just last month. It came down to $3. Can you imagine? And it's done. It's done 3x since then. I think this is going to be a double top of some sort, or a crest ball. Good opportunity to get in. I think that in 3 months' time, it might be selling for more than twice of this current price. And because in 3 months' time, we're going to have a lot of activity on the markets, it's a good opportunity to buy, basically. I'm not going to say more than that. Let me move on. So AXS, NFT token, good buying opportunity. in terms of what we have today for the market cap, we've seen some very slight gain, just like about a billion, in fairness, to the price of to the price of the markets overall. It was 1.38 trillion last week. It was 1.39 now. However, there's been more dilution, or there's been more money flow. Let me use the word money flow. There's been more money flow to alts. As you can see, that we've gained about 69 billion in altcoins over the last 1 week. So, which brings me to what I wanted to say that is likely to happen. So, okay, sorry. Let me leave that to later. In terms of sentiment, sentiment is the same. Like I said, nothing has really changed in terms of sentiment overall. We've been in extreme fear for the last 4 weeks. What am I seeing? 1, 2, 3, 1, 2, 3, 4, 5, 6, 7 weeks actually. Last week was 21, it's even 20 now. Many people still feel like, the price of Bitcoin is going to go down, and because of that, the market is going to get drained. But you don't understand what's going on in the background, which I'm going to tell you. So we're like hope now, saying a recovery is possible. I mean, we were here just a few months ago, and we're still going to be here in a few months' time. You can mark my words if you want to. We're going to be back here and probably go here before, not probably, we'll definitely be here before the year runs out. And then we're going to have a blow off top, and then we'll probably start the proper bear markets. In terms of the technical analysis that I wanted to show on the charts, where's my charts? Yeah, I'll start with Bitcoin dominance. So Bitcoin dominance picked up in the month of June, but right now we're where we opened for the month of July. Two possibilities here. One is that if the price of Bitcoin starts to climb rapidly before the month ends, then we might see dominance go back to 50%, which is a key level on a monthly level. If we don't break 50%, what it then means is that this trend is going to continue downward, and then we're going to have some significant spike in alts. Let me bring it down to the daily to give you a better picture. So right now on the daily time frame, what we're seeing is that we've sort of bottomed out on a higher level between 7th of July and the lowest bottom, which was 19th of May. So if you were to put in a trend line here, we can say that, hold on a second. Sorry. Yeah, so this is what I was trying to do. So we can say that we've put in a reversal trend on the Bitcoin dominance for the daily. And the last time we were this low was 2018, January or February. That was the last time, and around April as well. Basically 2018 was the last time Bitcoin's dominance was in this region. So what I was trying to say, bringing it down from monthly to weekly or to daily, is that if we continue along this line, then we're probably going to hit 50 at some point. If we hit 50 and it doesn't go below 50, then we're going to have a breakdown in dominance. When we do have a breakdown in dominance, it means that you're going to have a lot of pump, essentially, in the alt markets. So let me go on to talk about what I wanted to talk about. So what I wanted to talk about was security and crypto. But before then, I'm going to mention what I said I was going to mention at the end of the session, which is between now, which is July, and the next 3 months, we're likely to see significant money flow into altcoins. Why? Because Bitcoin is in the eye of the institutions. So the institutions would do anything possible they can do, which they've done already, to make sure that the price stays in the range that they can accumulate comfortably, which seems to be where we are right now, where the bulls are not upset and the bears are not, both are not content, but there's a stalemate, which is why we're sitting around 30K. The reason they need to do that is the longer they're able to buy at a cheaper price, the better for them in the long run. So regardless of what any big investment bank is saying, they are getting into Bitcoin. As a matter of fact, 2 weeks ago, I learned that George Soros funds were getting into Bitcoin. I understood then that in 2017, 2018, they actually wanted to get it before the market crashed. But I understand now that they're getting into Bitcoin. So when you have players at that level trying to get into Bitcoin, they will do everything possible to make sure that the price does not rise while they're accumulating. As a result, money flow that has been sitting in stable coins will start to find its way into altcoins. Not the major altcoins like Ethereum or Litecoin or Bitcoin Cash. No. Low cap or low market cap altcoins and newer project altcoins. And then no new innovation altcoins like we had last year. So if you were around last year, you noticed that from the moment the halving happened in May, Bitcoin price sort of tanked at around 10K and was just oscillating between 10 and 12, 11.9, 10 and 12, 11.9 for the most part until around July, August. What was happening then was that there was this DeFi boom. Of course, we didn't realize that was happening. That was what was happening at the time. But that, in retrospect, that was actually what happened. There was a DeFi boom, which meant the stablecoins money were flowing into DeFi projects. And you had DeFi projects like Compound, Aave, Uniswap, all just blowing significantly out of proportion. What then happened was when those started blowing out of proportion, then it was almost like Bitcoin woke up and decided that, oh, we need to catch up. Then the price of Bitcoin started to go from later in September. So the same thing is happening right now, because when you look at the DeFi market cap and the amount of money that is locked in DeFi, you find out that it's almost like it's not affected at all by the price of Bitcoin. As a matter of fact, it's growing. So if you're holding altcoins, congratulations to you, because what it means is that by the time this flips, maybe in the next, we're in July now, August, September, in the next 2 to 3 months, by the time this flips, it means your altcoin is going to be like 5 times the value it is today. I know the value it is today is probably like 1/3 of what it used to be. But what I'm saying is it's probably going to be 5 times what it is today because of that. Because what will then happen is once they go up in value like that and gain against Bitcoin, by the time the price of Bitcoin starts to move, before it reverses, they will all need to gain in value, both in their Bitcoin, which is Satoshi value, and in US dollar. So if you're holding altcoins, congratulations to you. If you're holding Bitcoins, might be a good time to get into some holds. Not a financial advice, as they always say. It's always for education and entertainment purposes as a disclaimer. But if I had Bitcoins, that's what I would be doing at this point. Yes, disclaimer, I don't have Bitcoins right now. All my stuffs are in altcoins. The disclaimer as well. So that's that about what I wanted to say. The other thing I wanted to talk about was, how to maintain security concerning your crypto. I know a lot of people use apps. I know a lot of people have hardware wallets, but it's important to ensure that, especially for your exchange accounts or your app accounts, that you have two-factor authentication. Because if you don't have two-factor authentication, you can be a subject of what you call a phishing attack. A phishing attack is basically you get an email that looks like from a familiar source, and then it asks you to do something, like maybe go and fill up a particular information. Basically what that email is, the email is like a hook. Once you hold on to the hook, you get drawn. So by you clicking on that link or following that particular email or following the actions, what then does is you've compromised your email. Let me use that word. You compromise your email. Now, if you compromise your email, it's a significant compromise. It's just like you compromise your phone line. What it means is people can get into your account and try to move funds. There was somebody on WhatsApp that was telling me that he wasn't able to log on to crypto.com. And I said, it's unusual for you not to be able to log on to crypto.com. And he's saying that you should get, the link from your email and you're not getting any link. So I said he should send an email to support. So what happened was, apparently, what the part he didn't tell me was that he had opened up his computer. I don't know what happened to some ransomware, and then his computer was hijacked, and they were asking him for $900, some crazy, funny, cheap amount of money. But the person had gained access into his email and was trying to access both his Binance and his crypto.com account. So the thing didn't work because the phone was a him. So that person will have needed the phone to, execute that operation. Otherwise, the person will have just wiped him out, essentially. So it's important that you take the pain to set up security. If you have an exchange account, ensure you have what you call multi-factor authentication or two-factor authentication. What does that mean? It means that for you to carry out any transaction on your account, you need two authentication. One might be email, the other might be phone, text message to your phone. I have three. I have what's it called? Google Authenticator as well. So if I even have more than that, Binance is actually very correctly set up in that. Not only do you have those multi-level authentication, you also have things like address whitelisting and what's the other one I wanted to remember? And I remembered it just now. Address whitelisting and anti-phishing code. So what anti-phishing, okay, I'll talk about address whitelisting first. Address whitelisting is exactly what it means. It means I can't send money to any crypto address that is not on my whitelist. For it to be on my whitelist, it needs to go through all my 3 levels of authentication: my phone, my Google Authenticator, and my email, meaning my text message, which is my line, my email, Google Authenticator. If it's not on the whitelist, I can't send money from any of my Binance accounts. What that then does is, before anybody who gains access to your account can do anything, they will need to have all the 3 before they can even include anything on the whitelist. So you can activate whitelist management on your account security Binance. Most people have Binance. Secondly, you can do what you call anti-phishing code. Anti-phishing code means you set a code that only you know that code. And anytime Binance is sending you an email, you will always see that code at the top of the email. If that code is not there, you immediately know that that mail is not from Binance. So for me, I've set a code that is a dialect, is a saying that my father used to say in a local dialect. So I'm the only one that can read that code. Or if you're Yoruba, you're probably able to read some of it. But that code is written in a particular way that only I understand what I've written. And that code always follows all my emails from Binance. What that does is that even if a phishing attack is directed at your email, you are able to neutralize it by not opening or following the action through once you open the email and the code is not there. So when I open a Binance email and that code is not there, automatically I know that that mail is not from Binance. It's a trap. Let me use that word. It's basically a trap to gain access to your details. So it's very important that you have that. Then for people who are using decentralized app or app wallet like SafePal, Trust Wallet, My Ethereum Wallet, MetaMask, you need to find a way to keep they call it brain key, or it's like passphrase, those 12 or 24 words. You need to find a way to keep them offline, predominantly offline, but you can't help it online. So how do you keep it online? One way you can do to keep them online is, I'm not advising that you do this, but it's a possible way to do it. You can keep them in an Excel, then encrypt the Excel. What do I mean? You encrypt the Excel with a password that only you knows and you've written down somewhere offline. what it means is anybody that, even if the person gets access to that file, maybe your Google Cloud or whatever it is, or Apple Cloud, they can't open that file because it's encrypted. I still don't know how. I mean, there's nobody that, I've not seen anybody that can open Excel encryption. I don't know, maybe it's possible, but I've not seen anybody that can. The second part is also to try to hide. You can hide the tab that you have it in, or you can color the tab white, meaning you color everything on the tab white, so nothing is showing, even if you open the tab. Those are ways I've used in times past to keep details of security for, decentralized wallets or hardware wallets. I think it's very important because the kind of gains that's coming in the next few months will be associated with a lot of infiltration. So it's very important they are properly set up now so that your account does not become compromised. I think I rest my case at this point, and I'll take questions, answers, and contributions or comments. Thank you.
Hello.
Hi, Sarah.
Hi. Hello, Dr. Demi. Thank you very much for speaking so intelligently, in my opinion. I was just going to ask a question. Obviously, we now know what is to come. We have an idea of when it's coming. My question would be, I mean, it's best to get ready ahead of time, but
Yeah.
also we do not want to buy in the middle. Do we have any idea if Bitcoin is actually still? I mean, you did mention it's bottomed out, but um, is this like conclusive that we're not going below where we are now? Just so that if we're accumulating, we're not, I mean, in the long run, we're still going to benefit, but if we can buy cheaper, it will be better. So that, is there any chance that obviously we're going lower than this and we could just wait a little bit before accumulating further?
Well, there's a chance. There's a chance that it might go lower, maybe to 25, 26. And the reason I say that is because there's this, it's almost like a fetish in the trading community about what you call CME gaps.
Oh, yeah.
So CME is Chicago Mercantile Exchange. The Chicago Mercantile Exchange trades only on weekdays. And they started trading Bitcoin back in 2017, 2018. When you have a situation where the market closed, let's say the market closed at 32,500 on Friday or the CME gap, but because Bitcoin is 247, it's crypto, it's not like stocks. The market continues on its journey throughout the weekend. And then by the time the CME opens on Monday, the price of Bitcoin is 35 or 36,500. What then happens is you have a 4K gap or you have a 3K gap. Traditionally, the market will attempt to fill the gap immediately. Like we had a gap about, I think last week. Yeah, it was last week. By Monday, that gap was filled during July 4 celebration. The gap was filled on a public holiday because CME gap opened on the Monday, and then the market immediately went down to close the gap. So there was a gap around 25, 26. I can't remember now. It was at 24, 26. But that gap was not successfully closed because there was so much momentum in the price build-up of Bitcoin from February. So that gap did not close, and everybody keeps talking about that gap. It's almost like an obsession when you have a gap that's not closed. So we have a gap that's not closed at that level. In the same way, we have a CME gap between 50 and I think 55 and 60K as well. Of course, we know that is going to get closed when the price recovers. So, but because there's been so much suppression of the price, people are now feeling that, okay, well, maybe if the price goes down to 28K and stays there, it's probably going to crash down to 24, 26 to close that gap, and then we'll go back up again. There are no guarantees. So we might close the gap, which looks likely from current trend. But then, because we've been so much in the oversold region, significant now. We've done 3 months. Yeah, this is July. So what am I saying? Actually, this is the 4th month. So April, May, June were bearish months, essentially, because the price was closing lower and lower month on month for those months. So we've had 3 months of bear season, essentially. Yeah, 3 months.
Okay.
Because of that, it's a bit dangerous, let me use that word, to assume that we're going to come down. So I'm looking at the monthly chart now. So 1, 2, 3, yes, this is the 4th month. And I did mention earlier on that this thick red line is the 12-month moving average. And we've tried for 2 months. We've not been able to close it. And I don't think, personally, we're going to be able to close below it because it's a long-term moving average. The only time we've been below this 12-month moving average was in the depth of the bear market and during the COVID crisis in the month of March last year. And we immediately closed above it the following month. So I don't see it going now. So if it comes down to, where is that now? 20, this is 24. This is 24 is around here.
Okay.
It will be a far cry, because what to them mean is that people that have that, so institutions like big hedge funds also trade the gap. Let me use that word, because in forex markets or in stock markets, the gap will always get filled. It's almost invariable. It's only in crypto that the gap doesn't get filled like it would normally be filled. But in the other equities market, the gap always gets filled. So if there's enough selling pressure, we can get the price to come there. It's not going to stay there. It's probably going to bounce off and then start pinging up. Or if there's a change in dynamics, we actually may not break this level, which is the 33,000 level. And I think it's beginning to look more and more. So people will say the more it tries it, the more it's going to be broken. But that's the same thing that happened up here. We tried to break above the 60K level. We didn't succeed for more like 9 weeks. And then the price started coming down. So if it continues to try and it doesn't succeed, the price is going to take a very huge leap upward. So if you want to hold, you can hold and wait and see if it comes down. But it's anybody's guess.
Okay.
So
cool.
Yeah.
Thank you. Yes, thank you very much. Yeah.
Mr. Albert, you had your hands up.
Yes. Good evening, Doc.
Good evening.
I just want to ask this. With this Ethereum upgrade coming, is it likely to have effects on the gas fee, maybe going down or something? That's what I want to.
Yes, the upgrade is supposed to drive down gas fee. Actually, it's part of the functionalities of the upgrade. It's to drive down gas fees and burn a fraction of the gas fee as opposed to giving it to miners. It's a sort of disincentive, if you ask me. And that's probably why it took a while for the miners to agree. Because what that means is that you can't increase gas fee in the case of high traffic. But even though let me put it this way, even though the gas fee is not going to be increased like before, the price of Ethereum is going to go up. And so I don't know, theoretically, it might land as the same result, like same status quo. How do I mean? Right now, when there's a lot of traffic on Ethereum network, the gas fee goes up. So for $100 transaction, you may pay $50 or $100 sometimes. What they're saying is that with this fork or this upgrade, the gas fee will not go up. And it will try to remain as low as possible. However, this upgrade also ensures that part of the gas fee is burned, which makes Ethereum now deflationary. Ethereum originally is inflationary, meaning it grows in supply at the rate of 2.5 to about 2.5% per year. What they're saying is they want to make Ethereum deflationary like Bitcoin. So that's going to drive up the price. That's why I said theoretically, it might reduce the gas fee, but the price of Ethereum also might go up. Like most pundits say that Ethereum will be selling in 5 figures before the end of the year, but definitely. which is 5x plus from where we are now. So it's definitely going to reduce gas fee. But then when you consider the overall increase in the value of the Ethereum ecosystem itself, the price of Ethereum, I mean, so if it reduces gas fee, for instance, and Ethereum is selling at 15K, that's like a factor of 6 or 4 or 7 from where we are now. So that's my view on that.
Okay, thank you.
Somebody asked about Ether Lights. What do I think of Ether Lights? I think it's a good token to have. I mean, it's 50-50. You know, if you bought Dogecoin in September last year, yeah, you probably look very stupid because it didn't mean anything really. People just bought it just for the fun of it, and because there were a lot of TikTokers that are making noise about it, and he didn't take on his own life until Elon Musk started tweeting about it, and then it blew out of proportion. So yeah, possibly a good one. There's a lot of noise around it, but I think it's just hype. Like somebody was saying, okay. I think somebody was trying to send me something that they were having a Zoom call or something. I'm like, yeah, it's just another altcoin. Depends on the hype. If the hype catches on, fine, you make money from it. If it doesn't, it can be rug pulled and lose all the money invested in it. So I won't talk about coins that I'm not sure of their fundamentals. I will not talk about them or putting them as coin of the week. What do I think about Heart on Network? I'm not sure I've heard about that one, but let's see. Well, on a general note, though, if you're not risk averse, meaning if you have very huge appetite for risk, now is a good time to buy altcoins. Look up to altcoins because really and truly. So this one was started out last year trading at 20 cents, 27. It's almost back to that price now. It's 37. Just that, yeah, it looks like a good buy. I don't know what it does. It looks like a layer 2 solution from what I can see. Yeah, it looks like a layer 2 solution for creating tokens. Generally speaking, the altcoins are going to, any altcoin you buy now, I mean any altcoin, except it's a complete shit coin that that they've sold off, that the founders have sold off all their tokens on the market, except it's completely shit. Even Baby Doge is going to pump. I mean, Mini Doge, all these ones that trending, all these trending coins. If you buy any of these in another 3 months, you'll be very shocked at what the prices will be, because then the market will be buzzing and then everything will be going crazy. So any of this is actually, I don't know about this one. I mean, this is September last year. It's less than 1 year old. It still has room to grow, depending if they have a real project. It might survive the bear market. But for me, once we're through with the alt season, I'm selling all my alts back to Bitcoin. Toby, do you have a question? Toby, your mic is on. Do you have a question? Okay, Chinelo.
Yes, I do. Hi, Doc.
Hi.
So you did talk about, I think, first quarter of this year about Kusama. You seem to have, I'm just wondering if it still has the same use case as you thought beginning of this year. If it's
Please
still
don't say. Well, don't sell your Kusama unless you really need the money.
Sorry?
That's it. I said don't sell your Kusama unless you really need the money. And even if you need the money, I'll beg you to reconsider. And I'll tell you why. There are 4. Okay, if you take BNB, if you remove Binance Chain from the mix, there are 4 major smart contract projects that are strong contenders to the market. And each of them, even though they don't have as big developer community as Ethereum, they are in their own right. They are big market movers and they have the potential to do very well. One, Cardano. Right now, the number of users on, I think it was Robinhood, that hold Cardano has grown more than the number of users that hold Bitcoin. So Cardano, smart network, completely geeky guy. They're focusing on their roadmap. They're not marketing like that. They're just focusing on the project and building the product. Heavy smart contract platform. In fact, very few projects are building on, maybe like 2 or 3 that people know. They're building on Cardano, but very, very hefty solution. And it has the ability to carry projects from Ethereum chain to itself. That's one. 2, Polkadot. Polkadot is where Kusama belongs to. As a matter of fact, Kusama is the, for those who know IT, is the UAT system, or is the test system for the Polkadot ecosystem. So for the guys that are sending me questions on the chat, I'm going to respond to your question as well. Just give me a moment. So Kusama is the testnet blockchain for Polkadot system. But the difference between Polkadot and Cardano is that even though both of the founders used to work together with Ethereum founder Vitalik to build the original Ethereum network, Polkadot is completely commercialized. In fact, it has commerce built into the infrastructure of the blockchains. So the way Polkadot works, and I think I've explained it in times past, is that you have a main chain, which is the Polkadot blockchain. Then you have parachains. Parachains are like secondary blockchains that can plug into Polkadot and then commit their transactions into Polkadot. It's almost like saying you have the base layer as Polkadot, then you have a layer 2, like the Lightning Network. But because Polkadot itself is structured to only take, I think, 100 or 200 parachains per time, it makes it a lot faster than, you know, many of the other blockchains. And that slot is a removable slot. Let me use that word. So you have to auction to be on that slot, and that slot is like a lease that runs out every 2 years. That model has completely commercialized the old Polkadot ecosystem, and they're catching on in terms of projects that are launching on. They have significant amount of projects that are coming on, especially in this month and in the coming months. What that means is that when projects start to launch on Polkadot and they're becoming successful, Kusama is going to get a lot of attention because Kusama is where the project needs to go and test first. And for them to test, they will sell their tokens to buy a spot on Kusama. However, Kusama has very limited supply. So I have more faith, quote and unquote, in Kusama than even the Polkadot main chain itself, because it has very limited supply and everybody will need to use Kusama first before having an option of bidding for a slot on the Polkadot ecosystem. I know I've gone a bit technical, but what I'm saying is it's one of those tokens that you want to hold as much as possible. Yeah, even when you're significantly profitable, you don't want to sell everything.
Yeah, I was going to say it does make sense. So you also see it as a long-term.
Yeah, and the last one is Solana, which I talked about a few weeks ago. Those are really huge smart contract platforms, and I think with the way they're positioning themselves in the market and the way they're operating as organizations, they are posturing far for the long term. And in 10 years' time, I mean, not they might, you will have more gains on them than, you know, Apple or Tesla or any of these companies can deliver today.
Sorry, what's the name again of this one? This last one you said?
Solana, SOL.
Okay. Thank you.
Yeah. What do you? Okay, so I'll talk about. Is there any reason why the market goes down on Friday? Everybody's going home on Friday now, and okay, well, that's not the reason. Just to say that the reason it goes down on Friday is that on Thursdays, retail whales, as we call them, meaning people that have a lot of Bitcoins or a lot of cryptos, Thursdays is usually the day they come to play. And why do they come to play on Thursdays? Most of the institutional investors sell off their stock or sell off their positions or close their positions on Thursday and Friday. As a result of that, most Thursdays see the market crashing. Almost all Thursdays see the market taking a dip. So if the market has been going on Monday, Tuesday, Wednesday, you can be sure that on Thursday you're going to find a kink in the market. Two things can then happen depending on the cycle in which we're in. If in the extremely bullish cycle, the market crashes on Thursday, then Friday night, it starts to rise up, or Saturday morning, like 1 a.m., it starts to pick up and races through all of Sunday. Then on Sunday night, it crashes again, or Monday morning, it crashes again if there's a gap on CME. So it's not all Fridays that you have crashes. But one other thing that I should bring to your notice, and I've not really discussed, I'll discuss it next week, is the dollar index. Dollar index is a very strong indicator of what's happening in the market, because it has the ability to affect both the stock market and all other equities markets. I've not really talked about it on this call, but I think maybe next week I'm going to go into details about it. So the dollar has gone stronger in recent days, and that's why it looks like Bitcoin has not been as stable as it has been. If the dollar, so it's right now on the chart of, let me look for that chart instead of talking about it, DXY. On that chart, it seems to be at a critical, what's this stuff now? Dollar, okay, sorry. Oh. Yeah, DXY, this is what I'm looking for. Where's the long-term charts, the daily charts? Yeah, so this was exactly what I was trying to say. So it looks like it's trying to break up above this key level, and it tried that in the previous days. Let me switch to the weekly. But it looks like it's breaking down. So it's not been able to cross this long-term trend line. So what that means, in essence, is that the dollar is weakening, essentially. In the previous weeks, from May, it's more strengthening up until now. It seems to have plateaued. Let me zoom out a bit. For the last 4 weeks, it's not been able to cross this level. If it starts breaking down from 92 downward now, you see significant changes in the crypto markets, because what it then means to the institutional investors is that, our dollar is no longer strong. Let's quickly move money to other assets that will make us money. That's where you're seeing this. In that case, the people shorting the price of Bitcoin will stop immediately, because they realize that, dollar index is coming down. And as you can see, in fact, from a trend line perspective, this is already a lower high, meaning it's probably going to come down to around 89. If this happens in the coming week, you can be sure that all prices are going to go up. Sorry, that was a diversion. SNM, I don't think SNM is a shitcoin. No. If my memory serves me right, somebody's asking if SNM is a shitcoin. So, I'm a bit wary about when it says any coin that has this BEP20 in front of it, because it usually means that there is an Ethereum version of that coin in existence. Yeah, it usually means there is an Ethereum version of that coin in existence. I'll be very wary. I'll be very wary of it. And the ranking is too fast, 3,800. I'll be very wary of coins like this, considering the fact that it just came out. No, I'll be very wary of this particular one. And I'll tell you why. One is Binance Chain. Not that there's anything wrong with Binance Chain, but usually scammers go to create Binance Chain versions of tokens. So I'll give you an example, just to exemplify what I'm saying. And they've already done it for people on Bitcoin. So this is Bitcoin, the real Bitcoin at 30,042. If you come down somewhere, where is it now? Here. So you see, there's a Bitcoin that has Binance Chain. So if I go to this Bitcoin, see, it's a Binance Chain Bitcoin token, but it's not Bitcoin. Anybody will have thought that, this is Bitcoin because you see Bitcoin BEP2 in front. So if you're not aware, you could have gone here to buy this one, not knowing that it's not really Bitcoin, because it's a Binance Chain token generated by somebody to fool people. It has a total supply of 80,000, and people are going to get into it. See, people are going to get into it. It was created June last month. People are going to get into it thinking it's some form of Bitcoin or the other. So I'm usually careful and wary when I see this in front of any token, BNP or anything, because it means that there's an original version somewhere. So please be very careful about such things, especially if this is your first year of investment in crypto. I would advise to stay away. What's my take on Shiba Swap that had total value lock of 1.5 billion in Shiba Swap? Okay, I don't know. I talk about Shiba. I talked about Shiba in was that April or May when it was really buzzing, and of course I know people that became crypto billionaires from Shiba. Unfortunately, I wasn't fortunate enough to be part of those people. So it started as a meme coin off the back of Doge, but what they've quickly done is they pivoted into actually creating a DeFi ecosystem. So they created a roadmap to say that we're going to create a DeFi exchange, and from this DeFi exchange, you're going to be able to stake your SHIB tokens, and you're able to, transact, essentially like a clone of Uniswap. If you know Uniswap, Bakery Swap, Sushi Swap, Snow Swap, and all the swaps, Shiba Swap is just like them. I don't have any problem with Shiba Swap. I think Shiba as a project has done so well, and it's become a threat to some of the existing ones. So I've been seeing that it's been getting some very bad raps in recent times in media, in the crypto media space. It's getting some bad raps. It's too early to say. Honestly, it's too early to say. My own personally, I'm talking personally, my own personal plan for my Shiba is to sell off when the market picks up again. I might buy it later during the bear market, but if I sell off when the market picks, I will have made good money from it, and I don't need to worry about what happens. So yeah, Shiba Swap is, literally less than one month now. Is the DeFi platform for Shiba, and on this platform you can trade Shiba, Leash, and Bone, which are token related to Shiba. So Shiba Inu is a variant, not a variant. It's a breed of dog in Japan or in Southeast Asia. So Leash and Bone are part of dog items, if you will. So I don't have any bad vibes about them. I think they're doing a good job. I think it's probably still going to pump a lot more when the market fully recovers. And as I said, the market is secretly operating in stealth mode. So regardless of what all this is happening, in fact, what was that DeFi pulse? I think it's DeFi pulse. I wanted to show you. The market is not really bothered in terms of what's happening in terms of market capitalization. Like you said, the person that said Dr. Leary, that total value locked of 1.5 billion in hours. Yes, because people know that the DeFi space is not subject to manipulation. So people that have their stable coins waiting and not doing anything, they're looking for somewhere to pump the money into. So naturally, there's incentive to put it in DeFi. See, 56 billion total value locked. This is let's see all year, just to put it in perspective. So you can see this space started out before August last year. So even though we've dropped from the peak in May, we're still above what we are at the beginning of the year, very much above actually, even above February. February was still of 46. So you can see that since we started July, we've been secretly growing up in total value locked in DeFi. And if the market continues this way, DeFi will continue to get a lot of market capitalization. And because it's not subject to anybody's control, like you have in centralized exchanges, there's a lot of incentives for people with stable coins to get into that space. So yeah, like I said, any altcoin is going to do well, particularly NFTs and DeFi. They're going to do well, definitely going to do well in the next 3 months, because that's where the money is going to flow. Believe I've answered everybody's questions. Okay, so thank you very much, everyone. I think it's a good time to call it a day. Have a lovely weekend. We'll see you again next week. Yeah, I think I'm going to talk about next week. I'm going to talk about factors affecting the markets in terms of other things to watch for, including the US dollar index and the likes. Have a lovely weekend, everyone, and see you again next week. Cheers.
You too, Dr. Temi. Thank you, Doctor. Thank you, Temi.
Bye.
Thank you very much, Doctor.
Bye.
Bye-bye.
Thanks, Dr. Temi.
Bye. Bye.